All right, let's talk about a legendary investor who's having one of the best years of his life. And he is absolutely miserable about it, seriously. But it's not just his mood that's fascinating, it's what he's doing with his money because of it. That's the real story here. And get this, the billionaire complaining about his own success just bet $411 million on washing machines? Yep, David Tepper, one of the greatest hedge fund managers of his generation, is making a killing in this booming market, and he's telling anyone who will listen how unhappy he is. His response? A massive, kind of wild bet on home appliances. And this isn't just talk. Look at the data. This comes straight from his fund's official SEC filings. In the third quarter of 2025, Tepper's fund dumped huge positions in some big names. Market darlings like UnitedHealth and Intel. And where did all that cash go? Into one of the most beaten-up stocks on the entire market. I mean, just let that number sink in for a second. $411 million. This was not a small, cautious bet. He jacked up his stake by almost 2,000%. Overnight, Whirlpool became his third biggest position. That is a massive all-in kind of move. And here's where it gets really interesting. This is the core puzzle. Right before he made that giant bet on washing machines, Tepper literally went on TV and said this. He's making bank from this rally, but you can tell he thinks it's all built on shaky ground. So this isn't just about an investment. It's like we're watching a psychological drama play out in real time. So what is going on here? Is he losing his touch, or is this just a classic Tepper move? Well, to figure out the bet on Whirlpool, you've really got to look at his playbook. And his entire history is basically built on one big idea. And that idea is contrarian investing. It's actually pretty simple. You bet against what everyone else is doing. You zig when they zag. It's all about finding opportunity where everyone else only sees a complete disaster. But man, it takes some serious guts and conviction to pull it off. And this, right here, this is Tepper's mantra. He's not just throwing around some old quote. He has built a massive, multi-billion-dollar fortune because he actually has the nerve to do it. And as we're about to see, he's done it again and again. I mean, this is not his first rodeo. Think back to 2009, the financial crisis, right? Everyone was panicking. He wades in, buys up distressed bank stocks that everyone else thought were toast, and walks away making something like $7 billion for his fund. Just this year, he called the bottom on Chinese stocks. So this pivots Whirlpool, a stock that's tied to the economy's ups and downs. It fits this very specific and, very profitable pattern he's got. Okay, but that brings us right back to why he's so miserable. If he's this master contrarian and he clearly hates this expensive AI-fueled market, why is he still in it? Why not just cash out and wait for the whole thing to come crashing down? Well, the answer comes down to another one of his big rules. It's simple. He will not fight the Fed. And to understand what he's doing right now, you have to get his punch bowl metaphor. It's everything. He might hate the party, but he is not going home while the drinks are still flowing. So here's how it works. The Fed is the host of the party, right? And when they cut interest rates, that's like them pouring punch for everyone. As long as that cheap money, that punch, is flowing, stocks and other assets can keep going up no matter how crazy the prices seem. And in Tepper's mind, trying to fight that is just a fool's errand. So he feels like he has to stay at the party, even if he doesn't like the music. And this just lays out his conflict perfectly. On one hand, he's complaining about the insane multiples. But on the other, look at his portfolio. It's still loaded up with the same big tech stocks that are driving this whole rally. He's basically dancing at a party he can't stand. But if you look really closely, you can see he's starting to quietly switch up his dance partners. See, he's not just ditching AI altogether. He's being surgical. He completely bailed on what he probably saw as the laggards, like Intel and Oracle. Then he took that money and plowed it into companies he thinks are in a better spot, making a brand new, huge bet on AMD and beefing up his positions in the big guns like Nvidia and Qualcomm. So he's still playing the AI game, but he's only betting on his absolute favorite players. And that brings us right back to the big question, the weird part. How on earth does a massive bet on washing machines fit in with this super sophisticated, high-tech AI strategy? It's like you're looking at the portfolio of two totally different people. Okay, first, let's just look at the crime scene here. Whirlpool's stock has been an absolute disaster. It's down almost 60% in 2 years, all while the rest of the market has been on a tear. Now, if you're a contrarian investor like Tepper, this is the kind of blood in the streets that makes your ears perk up. And here's the logic behind the bet. What the market sees is a company with a ton of debt getting hammered by a slow housing market and tough competition. What Tepper sees is a classic opportunity. He's betting that when the Fed starts cutting rates, pouring the punch, the housing market will come back to life. He's betting that tariffs on foreign competitors will give Whirlpool an edge. He basically sees a stock that's been punished way too hard for problems he thinks are just temporary. So, you see, the Whirlpool bet isn't some random, crazy idea. It is the perfect Tepper play. You've got a deeply undervalued company. It's got iconic American brands like Maytag and KitchenAid. It's facing headwinds that he probably sees as cyclical, not permanent. And here's the kicker. About 17% of its stock is being shorted. That means there's huge potential for a short squeeze. If the stock starts to go up, all those people betting against it have to rush to buy shares to cover their losses, which can send the price rocketing even higher. Okay, so what do we make of all this? What's the big signal that this master market timer is sending with this wild, contradictory move? Really, you can look at it in two completely different ways. On one hand, is this a stroke of genius? Is he seeing the turn before anyone else? A massive shift from all the expensive tech stocks back to cheap, forgotten value stocks, just like he did with the banks back in '09. Or is this a huge warning sign? Is the Whirlpool bet just a hedge, a safe place to hide when the AI bubble he's been forced to ride finally bursts? Is his misery not just an emotion, but actually a prediction? And that right there is the multi-billion-dollar question. Is David Tepper, our miserable billionaire, setting himself up for the next legendary trade? Or is his conflicted strategy a sign that this crazy, cash-fueled market is starting to make even the masters a little dizzy? The only thing we know for sure is that suddenly everyone is watching the washing machine.